baby, this market is pure fugazi. I mean, think about it. For the first time ever in like the last decade or two, Apple actually lowered its guidance, seeing slower, well, no revenue growth anymore, and the stock is almost hitting all-time highs. We're going to talk about some of my concerns around the economy as we review my $440,000 Canadian dividend stock portfolio, my plans with my portfolio moving forward, because I'm doing a big shift, something I've never considered doing in my life. But we're going to roll back first and foremost, because if you didn't watch the billionaire moguls, Warren Buffett, Charlie Munger, these icons that did a 6-hour interview at their annual shareholder meeting, I don't know what's wrong with you, but I don't blame you. But I'm sure you're seeing the clips all over YouTube lately. Everyone's highlighting them, and I don't want to highlight them. What I want to highlight is things that I found interesting about Berkshire Hathaway itself and where I think this is kind of going in the future, some of my concerns, and things that I find intriguing, because obviously they talked about Elon Musk, they talked about the future of the economy, the strength of the US dollar, oil, so many things in between. But I'll talk about my biggest concern once we get through their portfolio, because I think they sold some stuff that they didn't release. We won't find out until the quarterly report, and we know they've been buying Occidental Petroleum. They sold a little bit of Chevron, but really focused on oil in the last quarter. And I feel like Berkshire's become a trading house. You know, this was used to be a company where I thought they were all about sustainability, long-term investments like Apple, things they could buy into forever. But lately, you know, with Taiwan Semiconductors, they buy billions of dollars one quarter, sell billions the next. And we're seeing that with a lot of these arbitrage plays they have going on with things like Activision Blizzard, for example. Activision, this giant gaming company that was supposed to be bought out by Microsoft, is now being barred in the UK, and people think the deal's not going to go through anymore. And I think Berkshire, that was holding it primarily for that reason, would have sold it. I think Paramount, you know, this massive entertainment company that I have exposure to in the, the Schwab US Dividend Equity ETF, I think they posted pretty bad earnings. And this was something that Berkshire was recently buying, and I bet you they sold out of it because they're also cutting the dividend here as well. But one of the more intriguing things I find fascinating is oil. Their fixation on oil. Charlie Munger did this big spiel about how he thinks oil is going to be one of the most valued commodities in the future. And I'm not here to argue that, because I don't know what the reserves are. I don't know anything about the scale of oil. He thinks we should be reserving our oil in the US and the Western world and be buying it over the border and from foreign entities. And oil here doesn't show on this chart, but recently hit an all-time high in consumption coming into 2023. And I mean, we're seeing levels we haven't seen in use of oil since the early 2000s. There's headlines galore saying U.S. crude output and petroleum demand rise in 2022. And the thing that kind of, tickles my fancy a little bit when it comes to the oil industry is, how do you find that bullish nature? I wish they explained the exact ones and zeros behind their bullish sentiment, because oil consumption is primarily used in vehicles and transport, 44% according to this article. And with this transition, that isn't going to happen overnight. Obviously, this is going to be like a multi-decade, to the end of my lifetime kind of thing happening when we see this full conversion to electric vehicles, electric energy on the grid, nuclear power, all this stuff taking over, so we don't have to use hydrocarbons and things like peaker plants for our energy consumption and utilities. I think that's inevitably happening, but I think that would slow down eventually the use of oil consumption, especially in the Western world. I don't know. I find it to be an intriguing play. I'd love to know what you think about the oil industry. I have big exposure nonetheless through my ETFs, because obviously Exxon, some of these companies are the largest companies on the planet, but as they reweight themselves, if things change over time, at least I'm not managing it. The ETFs can kind of do some of that work for me. So what's my biggest concerns with Berkshire Hathaway? Honestly, I think because of the amount of influence, Warren Buffett and Charlie Munger have, especially with that recent deal in Japan, those massive commodity players, I think if they're getting really old, cross my heart, I wish I could see them live, but eventually they're going to move on from this world. And when they do, I don't think it's going to have a good impact on the stock, because they haven't been forefronting their team very much. I think they need to be bringing on Ted, Todd, some of these people that are very unknown in the industry that work there. They need to be more in the forefronted light. I think they should be sitting next to them and answering questions, so when this transition comes into play, people aren't shocked, because right now everyone and their grandmother thinks this entire company is primarily controlled by those two moguls, and they make a lot of the decision making still. And when they're not there to captain the ship, be at the helm, what does that perception mean for Berkshire Hathaway? Maybe it's a buying opportunity. I don't know, but it's something that I do fear about with this company moving forward. But let's get into my portfolio. Kind of at this moment, guys, we're sitting right around the 440K mark. It has been pulling back recently because SCHD has been getting hit, and it's 24% of my entire portfolio. And I've been stacking an aggressive amount of cash. I haven't updated my cash position, but that's also been growing as of recent because I haven't been purchasing stocks as much lately, and I'm going to talk about why I'm going to be building a cash position, because it might not be for what you specifically think. But yeah, the only thing I made a big purchase in was XIC as of recent. And I'm kind of just taking a breath because my dividends are almost at my goal. I was trying to get between 14 and 15,000 by the end of the year, and right now I'm at 13,459. I think with a few more investments, another 10 grand thrown in the market over a year, I'd have no problem hitting that goal. But this cash, or my dividend specifically, I'm going to be using for something proponently in the near-term future that I'm going to share with you at the end of this video. So just bear with me here. But first and foremost, if you want to support the channel, guys, you can always go to portfoliospreadsheet.com. If you like the way I track my portfolio here, you can buy one spreadsheet, get one for each platform. I also sell personal finance trackers if you want to track your income and expenses. They're sold separately, but buy one of those as well. You'll get one for each platform. It's a great way to kind of keep track of your financial independence to perhaps one day retire early. A very cheap, subscription based way of just having fun with finance. But let's get into this by some of my fears, because obviously Apple, this thing has been trucking. I've never seen a period in time where, they say when we find out we're in a recession is usually long after the markets have bottomed. I don't know if that's actually what's happening here, but it's kind of weird, and it really shows you the pure irrationality of the markets when we see companies like Apple for the first time ever. People used to short Apple betting on a slowdown in iPhone sales, and now if you betted against Apple and you're like, oh, things are getting bad, you would have been right. Yet the stock is pressuring toward all-time highs, up 38% since the October lows. And I don't know how long that can persist for. People were pointing out that it's the fact they still make a crap ton of money. And yeah, they do make a lot of money, but they're not growing. And this is a company that's trading at a 30 times multiple. And we're seeing that with a lot of companies in the US right now, leading to people think there's an overvaluation with a potential downside of anywhere from 20 to 60%, which, in all reality could come into fruition, and it could not. It's purely speculative. It's purely gambling in nature, which is why in this kind of state of the market, though I wish I was a little bit more into trading, I feel like this is a trader's market. I see a lot of opportunities in a lot of companies right now to just get in and out of them because we just don't know the short or long-term aspect. Take some money, trade a bit, put it into long-term investments, or even do options plays might be more proponent in a market like this, because just Schwab US dividend equity ETF has been getting hit pretty hard. I wouldn't say hard, it's down 13%. If you tap on the dividend over the same time period from the all-time high, it's actually not really underperforming even Warren Buffett that much over the last couple of years. But this one has been getting a lot of negative headlines, but I think it's a good buying opportunity. I'm not buying any more at the moment. VOO, guys, we can see that this one's also still trading down about 13% from its all-time high. And obviously if the US market goes down, this is going to go down with it, which is why I'm just putting most of my money in the short term into the Canadian markets. The only real ideas that I have right now is to continue buying XIC, because I think the Canadian markets are going to outperform the US in a recessionary environment. And in fact, that has been proving to be true. I mean, the Canadian markets are hardly down since 2022 if you tap on the dividend. And I think that's just because of the energy exposure, commodities. I think that's because we have much better percentage base of population growth, which leads to better performance in our monopolistic based companies, unlike the US where there's hundreds of banks. In Canada, there's a handful of telecom, and we'll talk about that in a moment. We got VDY as well. VDY, again, I'm just pulling all the cash out of this. I'm not reinvesting dividends right now, and this thing has been doing pretty well too. I mean, obviously with our bank exposure, energy exposure, it's not doing as well as XIC, but again, you tap on the dividend and you're in a good place. You're still outperforming the S&P 500, right? So in the Canadian economy, what we're really seeing happen right now is exactly what people were saying was going to happen. We're still seeing TELUS and Bell post earnings, not the best earnings, but still they're getting a lot of user growth. So we got TELUS and Bell here. These are paying massive yields. Bell's paying 6%, TELUS is paying 5.2 over the last year. They're doing pretty good all in all. If you're just collecting dividends, and I think that would be a good proponent to a retirement portfolio if you just want high yield. These are in a good place to perhaps start buying. And a lot of people think they can't afford their dividends, but I'm going to do a video on that in the future. So consider subscribing, because I'll break these down and their earnings, because it deserves a video in and of itself. And along with the banks will be posting earnings toward the end of this month. And I've been really teetering on buying Bank of Nova Scotia here, as just instead of putting my money in a high interest savings account, just put it in here, because I can't see doing too wrong buying this at these levels. They're going to have earnings coming up. You're getting a huge 6% yield. There's not many places you can get these massive yields, or many times in the market where we see companies like this paying these kind of yields because they can afford the dividends. They're not going anywhere, and damn, 6% is a lot. So what am I doing with my cash? What are my plans, particularly moving forward if I'm not buying these stocks? Well, I'm looking to actually buy some real estate. I make really good income in my life at this point, and I'm looking to save a lot of that income to get a down payment. I've been running the math, and even in this higher interest rated environment, I could see myself and my fiance easily coming up with a few $100,000, and we're seeing prices of condos in areas that I pretendably like a lot come down. I need to stop looking at them because I'd like to buy some today, but I'm going to wait until earlier next year. So, and we obviously want to get married and stuff as well too, right? So we're trying to plan all this stuff out. But so what I want to do is right now I'm sitting on about maybe 44,000 give or take in cash, but I'm going to keep building this up so you guys can watch me fast track my cash build. And yeah, we're going to try and put a massive down payment on a house or a condo, and it's not going to be cheap by any metrics. Ontario is an expensive place to live, but we make a good income. So I'm hoping that I can utilize these dividends in the future to be a backup payment plan to pay pretty much the mortgage or most of the base fees for whatever we're going to buy, and we'll use the cash that we have between us as a major down payment. And that's kind of just where I'm sitting, some of the plans, things that I want to do. But I'm still going to be investing a little bit here and there, just little bits into the Canadian markets, and try and get my portfolio to that 14,000 by the end of the year. I'd love to get a property. I don't feel like there's going to be many opportunities where the market, especially in Ontario, compresses like it is. And there's still a lot of sales going on, but again, I'm seeing condo prices, 2 beds, 2 bath, selling at levels that they weren't selling at a year or two ago, which again, I don't know if that's going to continue, but in a higher interest rate environment, I can only presume things will stay suppressed for as long as we're here. So I feel like I have this limited window of opportunity to take advantage of that, and I feel like I'd be stupid not to when I know that inevitably this market will likely shift, but I could be wrong. I'd love to know what you think in that comment section below.